Hello, everybody. Welcome to another episode of the TF Podcast, where we discuss technology, business, and finance. I'm here with my next guest. His name is Todd Goldberg. He's a co-founder of Crush Capital. He's working on something really interesting with Entrepreneurcom and his new series called Going Public. So I'm excited to talk about that, talk about entrepreneurship and startups and fundraising. So with that, Todd, I'd love if you could introduce yourself to everybody.
Yeah, sure. Thanks for having me, Jonathan. My name's Todd Goldberg. I'm the co-founder and co-CEO of Crush Capital, and we are the creators and owners of first of its kind series, an original series that's going to stream on Entrepreneurcom. The name of the show is Going Public, and what we'll do is we'll feature 5 founders on their journey of raising capital to a Nasdaq IPO. And for the first time ever, viewers of the series can actually invest in any of the deals featured on the show.
That sounds pretty awesome. I'm excited to dive deeper into that. I love just as we get started is where did that idea kind of originate from overall? And, because I know you're doing it as a small cap IPO, which is also not the most, common form of IPO, right? So I'd love to just start there. How did this come about?
Yeah, my co-founder, Darren Marble, started in Regulation A financial marketing and has marketed more than half of the Reg A Plus IPOs that have happened over the last 6 years. And so I was following his career. I came from the med tech industry, so medical devices, medical technology. And oftentimes when I was working for these companies, I was a great storyteller. And so they'd always drag me along to the pitches with the investors, whether they were VCs or otherwise family offices and high net worth individuals. And I really enjoyed telling the story of the company and the technology. And a couple of years ago, I did a pitch for this big crowdfunding VC called Our Crowd. And they're pretty notorious in the industry, but I didn't know anything about crowdfunding other than my friend and peer, Darren Marble, kind of working in it. And we did the pitch and we were successful. I think we raised, 7 or 8 million. And I called him and I said, "Hey, have you ever heard of Our Crowd?" He said, "Of course I have. They're like the biggest." And I said, "Well, we just did a pitch and it was successful. And like, now I understand, I think, what you do." I said, "I have an idea. I want to tell you about it. Where are you?" He said, "I'm in Manhattan." I said, "I'll be there tomorrow." So I flew out. And the whole plane ride, I kind of crafted my message. I honed in on the idea and the core message of the idea. And around that time, what was happening in the world, which has been happening for a long time, but I started to pay attention to it, was companies that I knew and loved, companies that I was a customer of: Uber, Lyft, Peloton, Pinterest, Sonos, Beyond Meat, all these great companies. They were staying private for quite a long time. The valuations were getting pretty big. And when it was time for their IPO, I couldn't buy in. I wanted to buy Uber shares before the IPO, but I couldn't. None of my friends or family or colleagues could. And so the idea came to me that using Regulation A+, we could inspire and really empower retail investors, customers, fans, and followers of companies to actually become owners in those companies. So I came out, I was really excited to tell Darren this idea and kind of pitch him on starting it with me. And before I could even finish the first sentence, he goes, "I've heard that idea before. It's not going to work." So he turned me down.
I love it.
I said, "Well, hold on a second.
That doesn't sound like Darren, though. That's funny.
Yeah, he actually called it, I think we joke about the acronym now, it's called a CPI, commonly pitched idea. It's like, oh, Shark Tank, but you could invest, right? But what we learned that day and what we worked through over the last, the 2.5 hours that I was there was, what is the reason why this show does not exist? If it's a commonly pitched idea and a lot of other people have had this sort of thought, or at least the thesis, why doesn't it exist? And we started to walk through all the gaps. And it turns out by the end of that dinner, we thought we could actually fill in all those gaps with the right partners. He had a network, I had a network, both were very different but complementary. And so I ended up bringing production, I brought distribution, and Darren brought capital market service providers. He brought technology, he brought an investment bank, and he brought financial marketing, which he was an expert in. And so we put all that together and we formed Crush Capital, and we haven't looked back since.
That's awesome. It's funny, right? Because I mean, good for both of you to just work through the idea. You know, it's sometimes like, wait, that doesn't sound right. But as you start to just talk it through and, you know, do the exercises that it takes, like, wait, how do we make this work? Right. Like if this was to work, how would it work? No, I think that's great. Now where, so I know you're doing this with entrepreneur.com. Walk us through a little bit of like kind of how like that even came to fruition. Like, how did you go ahead and decide to do this with entrepreneur.com as opposed to say a network or, you know, a YouTube series or something different?
Yeah, sure. I mean, we started out pitching ourselves, right? We live in Los Angeles. You could throw a rock and hit a producer in this town, right? And everybody knows somebody. So we're sales guys at heart, and we know how to prospect. And so we leveraged some connections we had, some people in our network, and we worked really hard, and we called it sniping. And we got to pitch at a really high level the head of original content at CBS. We pitched Lionsgate. We pitched Amazon, all of whom were heads of unscripted. And everybody told us the same thing. Oh my God, this is amazing. But what we realized was those people had to then sell it internally to their bosses or their bosses' bosses. And anytime the subject of investing came up, everybody felt really out of their lane. And when an attorney got involved in some of those pitch meetings, things got a little more forward. They got a little more progressed. And when attorneys got involved, entertainment attorneys, contract attorneys, they were also out of their lane because capital markets law is very different, right? Securities law is very different than entertainment law. So what we realized was we need to get to a distributor who, number one, has an audience of like-minded individuals who have a thirst for the entrepreneurial spirit, who live and breathe it. They're entrepreneurs themselves or aspire to be one day. They're business owners. They're starting a business. They've got a great business, and they just love learning from other entrepreneurs and being involved in this community. And we found Entrepreneur.com, and they had a show that was produced in-house called Elevator Pitch. A lot like Shark Tank. Entrepreneur gets in an elevator, they ride up for 60 seconds to the top floor, they're pitching the camera, and if the judges like it, the door opens and they get to pitch more and maybe get an investment, and if not, they take the ride of shame back down to the lobby. And what we realized was, for a minute there, they tried to get the viewers an opportunity to invest in some of these startups through an existing web platform, but it didn't work. They didn't have the right pieces. They didn't have the right technology. They didn't have the right approach, but they had an appetite for it. So I caught that, reached out, one thing led to another, and we negotiated an amazing promotion and distributions agreement, and we were able to get all of the parties aligned. And when I say parties, again, I'm back to the attorneys, right? Everybody's got a brand to protect. Everybody wants to make sure they're doing it in the right way and doing the right thing and all that good stuff. So it took about 16 months or so to negotiate it. We're really happy with where it landed. And that audience is going to be just right on point.
That's awesome. So how does that work exactly? So when you pitch to entrepreneur, are you selling the show to them and then they own the show, or are they essentially like kind of like have a royalty the show? What does that look like? How does that work?
That's a great question. And in a traditional model, like we started to walk down that road, as I mentioned, we pitched Amazon and we pitched Lionsgate and we pitched CBS. And so in that model, what you do is you try to sell them the show, and then what they give you is money to produce it, right? And you might become an executive producer and you might get a fee per episode. Our model was completely different. And we realized very quickly that we didn't want to sell the show because we had gotten really far down the line. In fact, we got an offer from the largest linear financial network, CNBC. And when we started walking down the road with the legal, we realized we would lose complete control of this asset. Something that we had worked so hard to build, something that was very much aligned with our passions. We wouldn't have any creative control in the series. We wouldn't be able to select the companies who were featured. We wouldn't be able to bring in the service providers that we had already worked so hard to partner with. And so what we approached Entrepreneur with was, we want to pay you. In other words, we want to buy into your audience. We want to become somewhat of a billboard advertiser relationship, but not in the classic sense. We're not producing an ad. We're not producing a commercial. What we're producing is a really high quality 10 episode narrative that's going to feature entrepreneurs. They are the stars of this show. And they love the idea. And we just had to work out the numbers, and we had to work out, the milestones. And so far, so good. They've been a phenomenal partner.
That's awesome. That's super cool. That's super cool. So, um, so you're in the process of selecting the different companies right now, and it's gonna, you'll start I saw that you're actually even recording some things. I'm assuming you're recording kind of just that process right now. Is that what's happening so far?
Yeah, we yesterday actually at this amazing place called The Row in downtown LA. It's kind of the rebirth of American business. The scale of this place is it's indescribable. We shot some screen tests. So we brought out the woman who's going to host Going Public, and we did her screen test. And then we brought several of the prospective issuers to the screen test as well to see how they played on camera. And all of them were just fantastic. They were just terrific. The host was amazing. We knew she would be. And so we're in a casting phase right now. And the types of companies that came to the screen test and that continue to come through our funnel through goingpublic.com who are applying for the series are mostly high growth consumer products companies, companies that have a physical, tangible product, companies that have businesses that are more easy to understand for just the general public. So mining and engineering services and things like that are not a good fit for this program, but things like health and wellness, beauty, clothing, spirits, things like that that are coming through. And we're looking at companies that have anywhere between 5 million and quite frankly, 80, 90 million in revenue, multiple years of operating history. These are bona fide businesses with big customer bases that are ready to tap in. And what I should say is allow their customers, fans, and followers to tap in and actually own a piece of the business. So we always say that if the ethos aligns, all the numbers will fall into place. And so far that's worked for us. Any founder who understands the power of leveraging their customers, fans, and followers to become brand ambassadors. There's no faster, better, stronger way to create a brand ambassador for your company than to allow that customer to actually invest and own a piece of the business that they like. Just like I wanted to invest in Uber and Lyft and Peloton and Pinterest because I love those products and I love those services, but I couldn't. So I never became a brand ambassador for those businesses because I never had that opportunity.
Right. And the way, this is all happening, it's through a Reg A filing. Is that correct?
Yeah, it's called a Reg A plus tier 2. And most of these companies, we may do one deal that elects to stay private, who can also still use that same securities exemption, Reg A plus, and they just wouldn't experience an actual listing event, an IPO on Nasdaq or a national securities exchange. But most of the companies who will be featured in season 1 aspire to list to Nasdaq.
Super interesting. Yeah, I mean, it's because, if you could shed a light on like why someone might go down this path as opposed to either raising venture capital or, when we think of IPOs, we, like you're saying, we think of like these Ubers or like these really big, massive companies that have, had multiple series of financing. So as a small cap IPO, like what, you kind of talked about that, right? Like 5 million to 40 million in revenue or so forth. But why might a company decide to go down this path as opposed to a VC path or otherwise?
Yeah, it's such a good question, Jonathan. And I think people forget that in 1997, Amazon was a true small cap IPO. Some would even call it a micro cap by today's standards. They raised $57 million, 5-7. And you think about that today and you go, oh my God, that's like the biggest company in the world with the wealthiest founder in the world. But companies used to go public sooner back in the 90s, right? All the way up into the bubble burst of the dot-com era. And these small cap IPOs were like the life's blood of the economy. And you imagine how many jobs Amazon has created over the last 25 years. And so what we're trying to accomplish here is provide an avenue for these companies to access the public markets in a new way. And this new way is better, faster, and cheaper than your classic S1 IPO, where those are really reserved for some of the biggest companies in the world that are doing billions and billions in revenue, which this particular securities exemption does not support. The maximum raise possible today is $50 million in a Reg A plus IPO. There is a proposal, though, that the SEC chairman, Jay Clayton, is reviewing to increase the cap. And for all intents and purposes, it looks like that's going to happen. And it's going to be increased 50% to 75 million that a company can raise through this particular exemption. And what we're really offering is an opportunity to build and grow net new customers. So think about it. If a company can still do an S1 IPO, if they're only raising, say, 30 or $40 million, they can do that. It's going to cost a lot more to do it. And how many net new customers are they going to pick up? Probably none, right? And then you start talking about, well, okay, what's the use of funds? If you're in a Series C, right, and you're trying to raise a C round and you're trying to raise 20 million, what percent of that 20 million is a founder going to spend on customer acquisition? Probably a pretty good chunk, right? It's going to Facebook, it's going to Google, right? These platforms that really help with customer acquisition. What we're suggesting and what we think is possible, and what we believe, is that leveraging your existing customer, fan, and follower base and allowing them to buy into the business also creates more revenue and more customers. We're exposing brands to over 15 million unique visitors through the Entrepreneurcom platform. So we believe that they'll collect net new customers faster and cheaper than they ever could with any other funding mechanism.
It makes sense. And, it's you're building you're getting your most loyal fans to invest, which means they're going to want to continue to, purchase and buy stuff from the company, right? Like, why not buy stuff or use the products that the company that you've invested in produces, over, their competitor or somewhere else, right?
So totally. We have this really amazing direct to consumer oral care brand. And I can't say their name yet, but rest assured, this founder is young. He's 27 years old. He's Hispanic. He built this from zero. The company has no debt. He owns 92% of the business personally. And when we connected with him and told him our ethos, right? We want to democratize the IPO. We want to give people an opportunity to buy in. How many customers do you have? He said, I have 750,000, and I get it. I get it. And this is the type of individual that when he opens it up and allows these 750,000 people and then another 15 million viewers, or access to 15 million viewers on Entrepreneur.com to buy shares, do you think that those people are going to buy oral care products from P&G ever again?
Right.
It's like you block out your competitors almost for life, I could argue. I mean, that's what we believe will happen. So you hit the nail on the head. I mean, you're creating really loyal customers and brand ambassadors when you do this.
Yeah, no, it makes a ton of sense. I think it's super smart. And, ultimately, like, that's the goal, right? Yeah. That's the goal as a founder, and as you're building, your team and who's using your stuff. Exactly. No, very, very cool. So when these founders, are working with you and they're going on the show, I mean, it seems pretty clear that being on the show is going to lead to more people wanting to invest, right? So not only like their founders and like their people, in that, what's kind of the way that works overall? Or is there any like regulations or anything like that need to be put into place as far as quote unquote marketing the sale, right? Because it's on television. Does that play any effect, or how does that work?
Yeah, so you're asking the right question. And I think one of the unique features that's worth mentioning about the Reg A plus securities exemption, which my partner's an expert in, and I like to say I've had a residency with him. So I'm still training, but It's been 3 years, so I'm starting to get a little more knowledge to be a little dangerous. One of the unique features of the Reg A Plus securities exemption is that you can do what's called general solicitation. And to just translate that, you can market the deal. Now, it has
Yeah.
to be qualified by the SEC. So the companies will need to file what's called a Form 1A offering circular, and the SEC will review it. They may ask some questions, provide some comments. And if the company can resolve those questions and comments, the SEC will have no further questions and comments, and actually they will qualify the offering. So by the time episode 1 airs, all 5 companies will have been qualified by the SEC, meaning that if you're a viewer and you're watching this show and you turn it on Entrepreneurcom on your laptop and you hit play on that video player, you may already know one of the companies, and so you're ready to invest, and you can. You would click a button that says click to invest, which would open up our platform. So we're a fintech, financial services meets media company. And so we have a platform that allows an investor, a retail investor, to subscribe to any of the offerings on the show in less than 3 minutes. And
Yeah.
then once the deals close, and once the offering closes and the deals close, and hopefully they'll list to Nasdaq, they'll receive an email with a password, and then they'll have access to their shares. They can do one of 3 things in that format. They can sell them, they can simply hold them because now they're publicly traded offer, and they can hold them, or they can link their existing retail brokerage account, their Robinhood account or their Schwab account, and then move those shares in there if they'd like to freely trade them.
Yeah. Yeah. That's super interesting. And is there a minimum that someone has to invest?
There's no minimum, but there is a protection built into the securities exemption that says a person must certify that they're not investing more than 10% of their net worth or annual income. So there is a protection built in there. You know, nobody's going to be able to leverage their life savings and invest in this kind of thing. And most companies feature, they'll select their own minimum. Oftentimes it could be as low as, say, $500. We've seen companies go lower. We've seen companies go higher. And the best part is that a lot of that decision making will be guided by the investment bank that we've partnered with. And so this is where it gets really interesting. Most IPOs over the last 100 years, all of the allocations of the shares are really provided to what are known as institutional investors. So these are really high net worth individuals. These are pension funds. These are family offices. And what we're doing in partnership with this investment bank called Roth Capital Partners is Roth is going to underwrite the deals. And for the first time ever, retail investors actually get an opportunity to invest alongside of the institutional clients. So those high net worth individuals, family offices, and pension funds who have really gotten all of the access to the shares before they list to the public market, now retail investors get to invest alongside of them. And this has never happened before.
Yeah.
And so what we're doing essentially is democratizing the IPO, and we're leveling out the playing field and giving retail investors access to something that they've been deprived of, quite frankly.
Yeah. No, it's super interesting. So I want to move away from the show and just talk about like the world, which might sound scary, but we're in this interesting time right now. People are at home. We were talking about that a little bit earlier, and while the economy seems to be, from an employment standpoint and like some of the traditional jobs, like the stock market is, still rallying pretty hard. I'm assuming you have like some interesting opinions on that, being that you're, working in this space. Just curious kind of like what your thoughts are overall with just where the market is and what we're seeing.
Well, I mean, I'll tell you first and foremost that I suffer from this disease called optimism, and a lot of us entrepreneurs suffer with it. But that aside, I mean, I think that there's opportunity in chaos. There always has been, by the way. IPOs have seen a massive uptick over the last 6 months, especially. You're seeing a lot of SPACs hit the market. But I think the tone of all of it, the spirit, Jonathan, of all of it is people believe in American business. They believe in entrepreneurs. They believe in the products and services that are coming forward, especially those that have really aligned with some of the changes that are occurring in the country and in the world, right? Things that are more technologically focused, things that are more direct to consumer, things that allow consumers to do more things online, things that are related to delivery, right? All of these things align with what's happening in the world. So are we going to feature companies that are more brick and mortar? Probably not in season one, right? Because it's not really aligned with what's happening right now. On the flip side of that, though, just like what's happening in the marketplace, companies that have been able to thrive in this kind of environment have customers, fans, followers, and institutions who really want to build that company up, invest, and help them get to even higher heights.
Yeah. Yeah. No, it
I
is
don't know,
true.
Jonathan, what do you think? I mean, it is eyebrow raising to see that in this kind of environment that the stock market is thriving.
So I have a theory. If we want the stock market to stop, you just need me to come in heavy and then to invest heavy into the market, and then it's all going to go downhill.
Is that the Murphy's Law? Yeah.
I'm pretty good at buying the top. So, I don't know, man. It's really interesting to me. I think that I'm not as well versed on this as some of the people that people get to see on CNBC, but I think what's interesting for me is just the amount of growth that we've had, not even since Corona, but just for the last 11 years, basically since 2008. And that's, I guess, not to be like one of those people that's like only cycles matter. It's just like when does the cycle break? That's kind of my thing. But I agree. Like if you're someone that understands markets, or you're able to capitalize, during these times, then you definitely should. But I've been wrong the past 5 months of like what's going to happen in the stock market. I've been just like completely wrong. I'm like today's the day things are tanking. Today. It's like, nope.
I heard something yesterday from one of my mentors. He said, if I had just done nothing with my portfolio, I'd probably be in better shape than I am today, and a lot less stressed.
Totally.
Because when you try to time things and try to go after things, so I think if you have a long-term view, the entrepreneurialism that's alive and well in America is going to keep on thriving. People have good ideas, they have good products, they have good teams, and they need capital to get to that next level. And
Yeah.
there's a lot of people willing to give them that capital and make that investment. And I also think that folks who are younger, the millennials and even the Gen Z, right? I'm an Xer, but like millennials and Gen Z have taken it upon themselves to study, to read, to learn. And one of the platforms that they go to, of course, is Entrepreneur.com. And there's several others, but they're really getting interested in investing in numbers that I don't think the country's ever seen, right?
Totally.
Investing in my generation was like something your dad did or your mom did or grandparents did. And now millennials and Gen Zers are saying, well, I can do that. I can learn that. I understand technology. I'm a technology native. That's really exciting to me. That's something that
I agree.
is unprecedented.
Well, right. And it's easier than ever, right? You have like Robinhood as an app, or, anything you want. You can buy cryptocurrency if you wanted to, really simply. It's definitely easier than ever. I totally agree. From that standpoint. I don't know, man. It'll be interesting to see what happens. And I think, I think a lot of people are like, oh, well, we'll see what happens after the elections. And like, it probably will just keep going up more likely than not, regardless of who wins. It's just gonna...
I hope so. I hope so, because I'll tell you what, there's a psychology to all of it, right? That's not lost on anyone. And when you look at your retirement account or you look at your portfolio, and if those numbers are higher, it gives you more confidence, even if that's just in your mind. But sometimes what that confidence translates into is, more consumer spending. And that's helpful for the economy, right? And so if we can just get ahead of this darn virus and get people back to work, I think the economy has a real strong shot at a really big rebound.
Yeah. On that topic, how's your work from home been?
I mean, I came from the med tech industry, so for the last 17 years, I've never had an office. There was always a home office, but I was never in it. I was always in the field. I was always working with executives and moving the business forward. So for me, working from home is not a change.
Yeah.
But I will say this, especially raising capital. I never thought in a million years that you could raise capital, something that requires trust, something that you would think requires physical presence, handshakes, um, that it could work on Zoom. But turned out people actually really love the efficiency of it. And I know for my co-founder and I, we were going to New York every single week, right? The heart of capital markets. And we
Mm-hmm.
were having strategic meetings and we were trying to get different stakeholders at the meetings and we'd extend our stay. And so when COVID hit and travel really wasn't in the cards, and we started to do all these virtual meetings, we became wildly efficient. And I think buy side, sell side, but both sides became um, pleasantly surprised that efficiencies were there and that actually business could get done. So for us, we just, in any environment, you've got to find a way to thrive. And I think, certainly there's been challenges, but I'm happy with where we're at today. And don't get me wrong, I want this virus to be over and I like shaking hands.
Sure. Sure. Yeah, no, it's definitely been a interesting time. I agree though. Like I've become more efficient, kind of in this COVID environment, and from content production to, like you're saying, meetings. I'm fundraising myself for something I'm doing, and so it's been good. Talking to investors has been fairly simple, or at least I can get on people's calendars a little bit quicker, I feel like, than it was before, right? So that's good too. I totally
And you
agree
get the
there.
right people in the room, right? Because they're all virtual. Whereas before, physical schedules had to align, and that's no joke, as we all know, right?
Yeah. Oh, definitely. Definitely. And then to shift the conversation a bit, I think that's probably what's going to make not the only reason, but I think it'll be interesting for your show, right? In the sense that one thing I've really noticed when it comes to content, even the content I produce, and because I host a lot of physical in-person conferences, right? And whereas now the replays on the stuff I do is much higher than it's ever been. It's kind of like this, like you watch things when it's convenient for you, right? Like that's why you have Netflix, that's why you have Hulu, that's why people cut the cord. So
Yeah.
like, they're going to be able to watch your show whenever is convenient for them, not at 8 o'clock on whatever day, only time they can watch it. And then they have to watch a replay or whatever.
Yeah, and passive. I think also, just to your point, passive television viewing is pretty much over, right? Like if you even think about if you're watching a ball game when we had them, or you're watching something on your big screen, most people have this out too, right?
Yeah.
They have their phone in their hand, they have their tablet. If you're me, you have your laptop, your phone, and your tablet, and you're trying to do a million things, right? The, the hard part, and I think this is where we're going to have a first mover and a strong advantage, is linking the small screen and the big screen, right? And you bring up a great point. People want to consume content on their own terms. So, showing up at 8 o'clock, and that's one strong reason why we also walked from a broadcast cable deal for going public, because we wanted people, the viewing habits of people to align with, being able to do what they want when they want. And we also didn't want them to feel like they were passive. They wanted to be active participants, and that's hard to do with broadcast.
Yeah, definitely. Definitely. Well, Todd, I've loved this conversation. One question I love to end on my show is, what's a question that you have that you'd like to ask our audience that they can think about as they go about their day?
I would say, what are you doing to take care of your mental health right now? What's your COVID hack personally for your own mental health?
Yeah.
For me, it's nature. And I live in Los Angeles, so there's a lot of cement. So you really have to search for nature. But for me, I must get out into nature, into the environment, and get some peace that way and some solitude. And I would just ask you to ask yourselves, what are you doing to get that solitude? Because it's so important. Even if you don't think it is, when you go get it, it will become
Totally.
clear. You'll realize, oh my God, this is what I've been like missing. This is what I need. So
Yeah.
that's the question. And so I pose it to you, Jonathan. What?
Well, yeah, the side questions for everybody. For me, I guess my answer would be, I just love my dog, man. Like, it's so funny. Like, my wife and son wanted a dog last year. And I'm like, no dog. I don't want a dog. I don't want to clean up after it. Like, if we get a dog, that's all you guys. You guys got to take care of it. And like, fine, and then sure enough, like, I take the dog for like long walks. They take it for walks too, but I take them, for long walks and stuff. And like, man, like, I really think having a dog has actually been good for me from like a stress level, because he's just so darn funny and I like him, and we, he's a good guy. But more than anything, he gets me going for walks every morning. So I notice that if I take that walk in the morning, my head's more clear, I feel better. And like the days where maybe I like wake up a little bit later, or I like, oh, I can't do a walk this morning or whatnot, like, it just takes me an extra step, because I'm not a coffee drinker. I just not because I think it's bad or anything. I just have never drank coffee, or tea. So like that walk is kind of like my jolt. What's
Don't
that?
start. You'll never stop.
Yeah,
Don't start coffee. You'll never stop. No, but no, I hear you. I mean, I have 2 dogs, and I love taking them out. So any excuse, any reason you can find, even if maybe you don't even need a reason other than I got to go do it. Get out into the air, get out into the outdoors, and be with yourself, right? Be at one with yourself and get some solitude, even if it's for 20 minutes. That's, I think, a big a missing piece for a lot of people right now. You can get really bogged down in screen time, and whether that's for business or pleasure, or you're just trying to watch the news. There's just a lot of emotional things swirling around right now for everybody. So I hope everybody gets some time and has access to some outdoor stuff.
definitely. Well, Todd, what are some good ways that people can stay in touch with you, pay attention to what you're up to, follow you, the show, etc.?
Yeah, thanks for asking. So our website, which is going to be the platform where investments get processed, ultimately we'll transition it. Now it's a casting site. You can get in touch with us there at goingpublic.com. And we have all the handles at Going Public, Twitter, at Going Public, Instagram, Facebook. But we also will be making some big announcements very soon here in the next probably 10 to 15 business days. We'll be announcing the host of Going Public. We'll be announcing the first issuer featured on Going Public, and we'll be announcing one of the first mentors who will be featured on the show as well. Huge titan of business, big tech titan. So we're just so excited to bring those first 3 announcements, and hopefully they'll make it, somebody will pick that up in the media and, make hay with it, and you'll be able to find us there too.
Awesome. Well, definitely. And once we'll definitely be sharing those out. I'm excited to watch the show, and we'll definitely be sharing out that information when we can. And, we hope to be able to have some of your contestants on the podcast as well. I think that'd be great, and just really looking forward to it. Looking forward to seeing it.
Man, keep doing what you're doing. I love what you're doing. I love the vibe of it. It's conversational. It's what people need. It's real and it's genuine and it matters.
Yeah. Thanks, man. I appreciate it. Well, thanks again for joining me.
Take care, Jonathan.
Everybody, thank you for listening to another episode of the TF podcast. Please make sure that you are liked and subscribed. Fill in those stars. It goes a long way in making sure that other people get to see this show. And you can follow me on Twitter at JGProduct or TF Labs at TF Labs _. And of course, you can learn more about what we're up to and see other shows at tflabs.io. Thanks so much, and we'll see y'all soon.